In this video, I'm going to teach you one trading strategy that works in every time frame. We only need two things to use this trading strategy. The first one is moving averages. The second one is liquidity concept. Many people are using moving averages wrong. Moving averages are basically this. For example, if we say 200-day moving average, that means it is the average price point for the last 200 days. When you add up each closing price from the last 200 days of trading, the 200-day moving averages is that result. The same logic applies to the 20-day or 50-day moving average. So moving averages are just indicators. They don't give you a signal on their own. When one moving average crosses another, it doesn't necessarily mean weakness or strength. So how should we use moving averages? If price is below the moving average, that means the price is lower than the average price it has been trading at. This shows me that the price is oversold. And vice versa, if we are above the moving averages, it means the price is overbought. The price is highly valued in the market and doesn't deserve to be at that level. So whenever we are above these moving averages, we should know that the price might reverse and start going down. Whenever we are below these moving averages, it is a signal that the price might reverse and start going up. I will show you how to use this trading strategy and how to detect these price movements. And I want to warn you about something. This moving average strategy works differently depending on whether we are in an uptrend, downtrend, or sideways market. So let's start analyzing. As you can see here, price was on a downtrend. And here is our specific low. Price pushed down for the last time below this previous low. And if you realize at this low, we are below all these moving averages. So that means price is oversold. We are below all these moving averages. So when we are below this low, where price is actually? It is below average point of 20-day, 50-day, 100-day and 200-day. Also price pushed down for the last time and got rejected from this low. That means price doesn't have logical target for the downside. It already got rejected from this low and turned its way. And when we are below all these moving averages, our first target is above the moving averages. And if price still looks strong, the second target is above this specific high. So let me clean the chart so you can see much clearer now. Price pushed below this specific low. After getting rejected from this low, it directly aims this specific high. After reaching this high, it also got rejected and started going down. And here is very interesting actually. So price pushed down from this high and cleaned this low's liquidity here. Let me zoom in. So price came down here, clean this intermediate sell side liquidity. And if you realize here, we are below all these moving averages here. So all these moving averages clustered here. When we are below all these moving averages, price doesn't have reasonable downside target here. It doesn't have real reason to continue to go down. Because when we are below all these moving averages, the real point of interest is waiting us above these moving averages and above this specific high. Let me clean the chart again. I want to show you one more thing that's very important. So this green vertical line shows the opening day of each month. So after starting of each month, first 10 to 15 days, price goes to liquidity. So where you can actually find liquidity? First, you need to look for below specific low and above specific high. And second, you need to look for moving averages. When a new month opens, first price targets these liquidity points. Either it goes above specific high or below specific low, and above moving averages or below moving averages. So when we use both specific high and low or moving averages liquidity, we really increase the chances of being right at trading. So for example, let's look at here. So this green vertical line is the first trading day of March. Price opened here and started going down. After cleaning this specific low right here, March 15, if you realize we are below all these moving averages here, and afterwards price reverses from this low and starts going up and aiming this specific high's liquidity here. So this was the last bottom. Price had a downtrend as you can see. After making its low here, it is reversing from this point and starts going up. So when you make sure that price had reversal from here, as you can see how it uses moving averages liquidity every time when it's going up. When price turns its trend to uptrend, you shouldn't wait price to go below these moving averages, because this price already took off from this low and it has upside momentum. So staying below all these moving averages after turning its trend up will show weakness. So when our trend is up and strong, it will just come down slightly below these moving averages and continue making higher highs. Let me clean the chart. You can clearly see here, April month starts here. It goes below the moving averages and pushes up. May starts here. It goes below the moving averages and pushes up because we already had reversal from this low and now our trend is uptrend. Let's see another example. So we have seen this strategy how it's working when we are trending, but if price is going sideways, it works a little bit different. I will just turn on my indicator. This is TIG indicator. So this is a private indicator that I made it. So you cannot find this indicator on TradingView. So it's completely free. You can find this in the description of this video. As I said, this vertical green line shows the opening day of each month, and it also shows all the important moving averages. So how our strategy is working when we are on sideways. As you can see here, price is below all these moving averages. And the next month, after going slightly below these moving averages, price pushes up above these moving averages. After price is distributing slightly above all these moving averages, in September, which is next month, it pushes down below all these moving averages. And in October starts here. As you can see here also in this candle, we are trading below all these moving averages slightly. And it is October 6th. Since we are below all these moving averages, price is looking for next liquidity pool. And you can see clearly our next liquidity pool is this specific high and also this one. So after staying below these moving averages, price pushes up and takes all these highs liquidity. It distributes above these specific highs. And after November month here, price pushes below all these moving averages and the specific lows. Let me clean here. Since we clean the specific lows liquidity here and we are below all these moving averages, as you can guess, our next target is specific highs liquidity. So we have seen how this trading strategy works. Only this trading strategy alone will give you the highest win rate. You don't need complicated tools. You don't need patterns or trend lines. You don't need complicated smart money concepts. You only need to know if we are trending or if we are sideways. And afterwards, you only need to know if price is overbought or oversold. Then you can easily define your target in the opposite side. If we are below all these moving averages, then our target is above. If we are above all these moving averages, then our target is below. So share your thoughts in the comments section if you find this trading strategy useful. And make sure you backtest this trading strategy before you apply in real time. Until next time, take care.